today in this video, what we're going to talk about is a tax concern that many folks pay, or excuse me, that many folks face in their retirement years, and something that also affects Medicare costs and Medicare expenses. And so we want to spend a few minutes talking about that. And that is not only the marginal tax rates that you can pay when you're dealing with this, but also the issues that come into play with Medicare premiums. So the issue that we're going to talk about is called IRMAA, Income Related Monthly Adjustment Amount. Okay, so IRMAA, Income Related Monthly Adjustment Amount. Now, this issue begins at the tax code, where the break point between the 22 and the 24% marginal rate. So that break point between the 22 and 24% marginal rate, whether you're a single filer or a married couple, that is the point that you start getting close to the IRMAA, okay, the income related monthly adjustment amount. And the way this works is that your adjusted gross income is considered by Medicare to determine what your Part B premiums will be. So on this page, you see income related monthly adjustment amount, IRMAA, and Medicare, what they use is they use the modified adjusted gross income that gets reported on your IRS tax return from 2 years ago. So the tax return that you filed 2 years ago is going to be the most recent one that will be provided to Social Security by the IRS. So what happens is sometimes people will retire and then file Social Security, and then maybe their income has gone down, but they're paying higher Medicare Part B premiums because their income was very high while they were working. Maybe they made $300,000 or something, or if you're single, maybe they made $150,000, and so that will force those Medicare Part B premiums to be higher if you have that kind of income. Now, there is a report that you can file in a case where your current income has gone down for some reason or another. Now, not all things qualify to file the form, but you will be eligible to file a form to get your Medicare premiums relooked at if you have a qualifying event. The main qualifying event is some major adjustment in your retirement income. If you had a pension reduction, if you had a retirement, so you lost employment income, if you had a sale of a property that generated excess revenue, some of these things can be qualifying events. Now, the point at which you have to start dealing with excess Medicare premiums or higher Medicare premiums for a single filer, that happens at $87,000. For a married couple, that happens at $174,000. And what that will do is that will cause your Medicare Part B premium to go from $144.60 to $202.40. And so that increase is about $60, but it's $60 each if you're married. Okay, so if you're a married couple, it's going to be $120. If you're single, it's going to be $60. Now, if you go from 87 to 109, that's going to bump you to 289. If you're married, 174. If you go over 218,000, that's going to bump you into the 289. So the reason why I highlight this is that many folks who interact with us from our workshops and ask us to do some planning work, they end up, we think very strongly about doing Roth conversions, and they like the idea of doing Roth conversions. And so there becomes a lot of opportunity to do that kind of advanced tax planning. But one point of contention that you need to be careful of is how it's going to affect your Medicare Part B premiums. It doesn't improve suddenly the quality of your Medicare. It just is a higher payment, which is effectively an additional tax. Now, there are times when it is still going to make sense for you to voluntarily pay higher Medicare Part B premiums, but you do want to be careful about it. Now, sometimes if you're going to be in these ranges in retirement, if you don't do Roth conversions, there are times when doing Roth conversions while you're working, even though the taxes will be fairly high on that, you can sort of game the system. Because a Roth conversion, for example, is not a qualifying event to tell Social Security, hey, fix my Medicare Part B premiums. That is not a qualifying event, but retirement is. So you could do a very large conversion while you're still working, and you could get additional dollars converted and out of your IRA accounts. And then once you retire, even though it was actually the conversion that puts you into these higher amounts, because you retired, you can still force Medicare to reconsider your premiums and potentially lower them. Okay, so that's all for today that we're going to cover, and hope that you found this helpful. We encourage you subscribe to our YouTube channel, follow our Facebook page, Einstein Retirement Workshops, and we would love to see you at a future event. We do 1-hour presentations on taxes and Social Security. We have other topics that we are sure to be doing here soon, and so we do hope to see you at one of our live events. And we also hope to interact with you, and if we can be of help, to help soon. Take care.